The DXY is on the move on Thursday, holding above that 97.7 support. So we'll have the details in today's video on key levels to watch, imbalances, and also how all of this could impact the euro and the pound. Hey everyone, Justin Bennett here, founder of Daily Price Action, Forex trader for 17 years, and I'm putting out videos like this one every single weekday, so be sure to subscribe. All right, DXY, looking at, let's say the 1 hour time frame. Let's start here because really this is where the action is starting here on Thursday with the market finally breaking above this 97.7. Now it's been hanging out here for the past few days, and this is an area that we talked about in the weekly forecast that was key following last week's close. So if we take a look at the weekly time frame, let's flip over here and take a look at the weekly because really this set the stage for what we were likely to see from the DXY so far this week. So you can see the back here, 97.7, this is our level right here, and obviously a very sideways market here from the DXY. The market was holding above it here on a weekly closing basis. It dropped below it here, dropped below it again, and then closed back above last week. So that meant that this area down here was key support. However, we had a couple of things here that were, worth paying attention to this week. And one of them being the fact that we had this imbalance back here. So if we take a look at the 1 hour time frame, you can see we had this imbalance down here at 97.5 that was satisfied with this move. So I made videos, this past week talking about the potential for a wick down here into this area. I made those videos back here in this region talking about that potential for the wick down here before the bounce. Now, it has been a little bit difficult here over the past few days just because, again, the market has been so sideways. And that's really the second factor here for the DXY is you have to understand that this market has been range-bound for months. And so, like I've said in recent videos, I think that the best way to approach this, already a lot of these, Forex currency pairs right now is to just trade the range as long as it's there. So back here, guys, right, this was our range. And then we had the drop below, that retest of that 2011 channel support. This was your range down here. Last week's close, though, like I said, that test of 98.6, this was now your range, okay, with that wick down there toward 97.5. So if this holds up from the DXY with this move here on Thursday, then we have the range between 98.6 and this area down here around 97.7 down to 97.5. So it's important to understand the context here because, obviously this isn't a market that you want to be looking for, massive moves because we don't really have a trending market. Yes, the DXY has been down in 2025, but if you look at the last few months, it really has been very sideways. And also, once again, I've mentioned this several times, but I want to talk about it in this video as well, that the monthly time frame, you have the bottom of this channel here from 2011 that has been critical support for this market. Look at all these highs back here. This is an equidistant channel, and you have the market holding above this here on the high time frames. And this was also the level that was tested going into FOMC. That last FOMC, we saw the DXY, looking at the daily time frame, you can see where we had the DXY come down here and test this support right here going into that Fed rate decision. And this is where we talked about the potential for that bullish move from the USD. And sure enough, we got it. Okay. So right now, even though it is range bound, we are seeing since this low down here, we are seeing the market start to carve some higher highs and higher lows. So that's important to understand because again, within the context of this, if this holds up, then we could get that pushback here into 98.6. Now, if we get that, that's going to be a significant moment here for the US dollar because looking here, once again, daily time frame, you have this descending channel off of these highs and these lows. So this is an equidistant channel. This is what I mean whenever I talk about markets love symmetry. You can see that this is an equidistant channel, meaning that these two levels right here run parallel to one another. And guess where the top of this is? Right up here at 98.6. So once again, if we get the move higher, don't go expecting, and obviously this is just my opinion, but don't go expecting a market that's just going to move significantly higher. It could do that, of course. But for now, we are dealing with a range here from the DXY. Now, looking at the euro, okay, let's take a look at this market and talk about what we just mentioned here on the DXY, what we just covered on the DXY, and how that could impact something like the euro, which so far, like I've said recently as well, looking at the daily time frame, you have the market, okay, the euro breaking below this trend line here from that February low. So you have all of these touches here over the past few months. We did get a breakdown here recently. And so far, we're getting lower highs and lower lows from the euro. That's important to understand. Even though this market has been very sideways, we are getting it kind of carving those lower highs and lower lows after testing the top of that channel. Because also keep in mind, looking at the weekly time frame. Okay, let's start here and take a look at this because this also sets the stage for what we could see over the coming weeks and even months. Because the euro has been trading within this channel ever since 2022. And we have two touches off of the top of this level here, resistance, so far in 2025. So yes, it has been very sideways, but this is also why I've been discussing the potential for a larger top for the euro. Now, the jury is out on that. We don't have confirmation of that just yet. So far, this is just a very sideways market. Okay, now looking at the 4-hour time frame, You probably saw it earlier, but we have the euro potentially breaking down from this congestion here. Okay, so far this week, very choppy week, and we are getting that potential breakdown here on the 4-hour time frame. Now, as I make this video, there are 2 hours left in this current candle. So this right here is unconfirmed. So what you need to have happen here is the euro close below all of these lows back here, right, and flip this area to new resistance. If it does that, then I think we could get that push down here into some of these lows. And also keep in mind that we have unfinished auctions down here for the euro right around 1.1699. We also have one around 1.1657. So these unfinished auctions down here, these are TPO levels, time price opportunity. That is a premium indicator on TradingView. There's also multiple platforms out there where you can get it, but in my opinion, I think the one on TradingView is, from the ones I've tested, it is, one of the better ones, if not the best one. And the price you can't beat. I think it's like 50 or 60 bucks a month for, TradingView Premium to get access to this indicator. So anyway, guys, this down here is an unfinished auction. Unfinished auction down here, markets tend to revisit these just because of the market profile at the time indicated that sellers were not finished back here, okay? So these tend to be, quote unquote magnets for a market. They can also serve as support and resistance a little bit, not as much as single prints like this one up here that we talked about, which you can see was just right around that high so far this week. Okay, now I did talk about in recent videos the potential for a move up here to sweep that high. Although, again, if we get the breakdown here from the euro, then this area is going to flip to new resistance. Okay, so just something to watch here over the coming hours and into Friday. Obviously not financial advice, always just my opinion. But one last thing here too on the euro, before we move on to the pound and talk about that briefly, looking at the euro, it is holding below that February trend line like we talked about. And one pocket here, if we were to get this, it's still a big if because we don't have confirmation just yet. But if we were to get the market taking out lows like this down here around 1.1645 on the high time frames, then obviously you've got all of these lows back here. That is certainly going to be key support for the euro. However, below that, you have these unfinished auctions down here. Now, the key area that I would watch though, if we do get a continuation, if this breakdown from that February trend line ends up being a continuation here for the euro lower, one area, guys, that I would keep a very close eye on in October, potentially into November, is going to come in down here in this region. So this rally back here from the euro was very aggressive. We saw a pullback into this candle, but it was still very shallow. Now you have this imbalance back here in this region. And furthermore, just looking at this chart, right, even without TPO, I can tell you that this area back here is a pocket. Okay, this is an imbalance here for the euro because we saw a very aggressive move off of this low, and we haven't seen the market pull back into this area. Now, obviously, I might be getting a little ahead of myself here because this is quite a bit lower from current levels. But the point here is that if we do see this continue lower and start to break support, then this area around 1.15 is going to be one to watch. Now, alternatively, of course, the flip side here for the euro is if it were to take out this area up here. I mean, really the bullish case here, guys, and this is where you really have to have solid invalidation levels because right now, the invalidation level for the bear scenario, in my opinion, looking at this trend line here that it broke down from recently, and also, again, the top of that channel, going back to 2022, the invalidation level for this market right now is all the way up here. I mean, it's way up here in this region. So even if we got to move up here up above this high, that doesn't necessarily mean the euro is back to being bullish longer term in the macro sense. So really, I mean, this area up here above 1.185 is going to be the invalidation area. Okay, so just keep that in mind. Even if we get the market taking out this high here, it doesn't mean that the euro is bullish in the broader sense. It's still a very sideways market. And again, you have this massive resistance area, that confluence of resistance up there above 1.18. Okay, now looking at GBPUSD, this will be pretty quick, guys, because what we talked about here in the weekly forecast, what we talked about there on Friday, okay, last Friday, was this candle right here. So this closed back above 1.338. This was significant because you can see all of these lows back here for GBPUSD, and even this high, you can see where we got the close below on Thursday, close back above on Friday. This right here is a bullish fake out. Now, that right there, what I talked about in the weekly forecast was that this was potentially the technical catalyst for the move back here into this consolidation. And that's exactly what we saw here so far this week before that rotation lower. Now, there is still a pocket of imbalances and, unfinished auctions up there around 1.356, 1.358. However, it doesn't mean that the market has to come up here and test this. Markets can leave these areas open for a very long time. It doesn't mean that we have to get that move up here. I did kind of think it was likely when we saw the pound up here yesterday, okay? Just because it was so close to this area, I did kind of think that a wick up here first, could be in the cards, and it still could be. But looking at this market now here today, it is starting to look obviously a little bit more bearish. Okay, now in terms of downside targets here for GBPUSD, I think what it's going to take is if we get the close below 1.338, and really it's going to come down to 1.333. That is the level, in my opinion, to watch here to really break out of this range, right? If we're going to get a continuation and a move down here toward this low, then that's the area to watch. Now, like the Euro too, we also have off of this low down here, we don't have any single prints down here in this area in TPO terms, but what we do have is this candle, this very aggressive bounce here from 1.314. And this area down here, once again, just like the Euro, it's kind of a pocket here for the pound to keep an eye on, 1.32. I think if this were to break down and we were to get a larger top forming, this down here is going to be the area to watch. That could act as sort of a magnet for this market to draw it lower. But again, you've got support down here at 1.333, 1.338 to be aware of. Okay, so, a range-bound market for now. That's the bottom line here for the pound. But it did come into this consolidation here nicely this week, like I mentioned in the weekly forecast. All right, so last, guys, bonus content, dollar yen, looking at this market here. What we talked about in the weekly forecast as well, and this has been a relatively weak market. I mean, a lot weaker than some of the other dollar quoted majors out there. This market has just been trending lower, breaking back below 148.7, which was that key support that we talked about in the last weekly forecast. Now, the key consideration, though, for the dollar yen, and really, I haven't been too interested in this market just because of how sideways it's been. You could look at this on the daily time frame, even though this back here was a range. And yeah, you could have traded it, but it was just so messy through here. I mean, this is the most chop we've seen from this pair in a very long time. Now, one thing to keep in mind, though, or keep an eye on this week, is going to be this right here on the weekly, because what you'll notice is that even though you look at the daily time frame and this looks kind of similar, like you had this break above and that failure, and then once again here, that is true. However, the one thing you've got to keep an eye on here is that the weekly time frame. Okay, so we obviously only have just over 24 hours left, 1 day and 6 hours specifically left in this weekly candle. However, the thing to keep an eye on is going to be the fact that back here, that failed breakout, we never got a weekly close above 148.7. We never got a break above this area through here, and last week we did. Okay, now I'm not going to get ahead of myself and say that the market's likely to close the week above here, but I think that if it were to do that, then you have the dollar yen holding above these highs back here on a weekly closing basis. And really, if you look at this too, it doesn't have to technically close above 148.7, because when you look at this area on the weekly, right? I mean, even if it were to close up here in this region, right, anywhere above here, I think that you have that potential catalyst for the move higher. But it all comes down to also what the DXY is doing. I mean, if the DXY is rallying from here and taking out levels like 98.1, that single print here from this past week, and rallying toward 98.6, then of course you could have the dollar yen also, again, reclaiming that area around 148.7. So I thought I'd point this out here because even though we are seeing the dollar yen rotate lower so far this week, last week did close above 148.7. So I think it's going to be interesting to see how this market ends the week. Does it close above here or close to this area, or does it close back below to keep this market range bound? And again, a lot of that's going to come down to what the DXY does here over the coming days. Okay, but bottom line, looking at the DXY, let's finish up here. 4-hour time frame, you have the market, again, that 4-hour close that just occurred as I'm making this video, closing above here. So this right now is once again key support. You have resistance up here. There is a single print up here right around 98.1. This is going to be key resistance, also a potential magnet that could draw this market higher, but keep an eye on this as resistance. And then of course you have that area up there around 98.6. Obviously, if the market were to lose this area down here between 97.5, 97.7, that would look bearish down here toward these lows. All right, guys, that's it for today's video. I hope it helped. Be sure to subscribe to the channel, hit that like button, and also join us in VIP. Check out the link in the description of this video for 85% off lifetime access. I will see you tomorrow in the weekly forecast. Trade well out there, and talk to you again in that weekly forecast video.